It's about that time of day again, folks. It's about that time. Welcome back. Welcome back. Joseph James here, School of Trade. I've got Marty Errico from Traders Audio alongside me. Well, he's the collective on with me here this morning. I'm here in Los Angeles in my home office. Marty Errico is braving the elements on the NYMEX exchange, going from Los Angeles to New York City this morning. As always, welcome to our 7:30 a.m. crude oil morning prep. We're going from the screen to the floor this morning. My name is Joseph. I'm a technical analyst. I'll be specializing in a top-down approach this morning, starting with a weekly down to a daily. I'm going to drill it all the way down from weekly charts down to 5-minute charts as we anticipate the direction at the open and look for high percentage trading opportunities. That's right, folks. All we can do this morning is be prepared for that quiz the market gives us every morning starting at 8 o'clock in the morning. We've got 3 scenarios to prepare for. We've got bullish, we've got bearish, and we've got sideways scenarios to prepare for this morning going into 8 o'clock. I'm going to jump right into it right now before we head over to Marty, and I'm going to begin this morning looking at a weekly chart here this morning. We always look at weekly charts at least once, twice a week. Now remember, kids, if you're following along at home, we know better than to use weeklies or dailies for trading opportunities. Weeklies and dailies, even 4-hour charts, are often thought to be a little bit too much, right? A little too slow for us to be using for intraday levels, but they do a very effective job at giving us a taste of what's happened in the past, because we know what's happened in the past is likely, right, just might happen again in the future. First thing we see this morning is we look at this weekly chart. We can see here the last 4 weeks. Of course, we talked about this last night on our newsletter. Talked about last night here on a weekly chart how we had finally seen over the past 4 weeks these prices had finally tested this high of this wedge and come off those highs. So it wasn't until last week, late last week, that we finally get a chance to see those sellers finally gain some ground. Two-sided trading the last 3 or 4 weeks, this really confirms a little bit more of it. As you can see this morning, we've come off the highs of this wedge. We've pushed a little bit lower. We couldn't quite make it down to that 91, 96, 92. And it looks like we're right back at it again with a green weekly candle. That green weekly candle is a clue this morning. We saw this coming a mile away last night. If you were on our newsletter last night, head on over to Sideways Markets. And last night, exactly what we talked about. Crude oil strategy says to buy pullbacks, right? We knew that we needed to get into our long positions early last night. If you missed that last night, guys, there's a sign-up form right on the blog. Our newsletter goes out every evening and provides some direction. Now, you can log into your course materials on this, and you can grab all the charts that we looked at every day. But weekly chart tells us we're looking at higher prices here this morning. Two-sided trading. This was the giveaway last night. The daily chart last night told us we were going to get this big bounce. If you recall last night on the newsletter, we talked about how price had made this double top, had pulled back off it, and of course got stuck in this trigger zone. This trigger zone was a huge clue. Without knowing where those Fibonacci-based zones are, we may assume this price is going to just tumble all the way down to 92. So we looked at it and we go, man, what got in our way between testing the 92? Well, there you go. Now we know this trigger zone has held. Now, I can't predict this, guys, right? I didn't predict that trigger zone holding. I simply looked at it and said, okay, we got 1, 2, 3, and then today's 4th bullish candle, right? You can easily see it. Trigger zone holds, and we know, of course, with 3 closes, zoom in here even closer, 3 daily candles closing. Again, that's 1, 2, 3, and then 4. 4 in a row, 4 bullish candles. That's what gave me enough confidence to start looking at this as being a buy side last night. Now, of course, we come in this morning just before 8 a.m. and, of course, the U.S. session kickstarts at 8 o'clock in the morning. We're looking for opportunities here. Let's drill on down now to a 4-hour. The 4-hour is what put the nail in the coffin last night. The 4-hour is exactly what I used last night to make such a confident directional call. And that was because we had, of course, these price wedges now. We're trading at the lows. Here I am at the low of this price wedge. Clearly that's going to be support. So we're talking about the daily trigger zone told us we got support, right? Daily trigger zone. And then we have the 4-hour price wedge. And since we're down towards the lows of this 4-hour price wedge, you got it. expecting that bounce off the lows. Now you might be saying, okay, but how high up can we expect this to go? One of the things we're going to run into is this trigger zone now on the 4-hour. You're going to see another one on a 60-minute in just a few moments. This 95.78 to 94.78, that's a $1 range. That's a 100-penny range. We've already missed our opportunity to buy at this point, folks. The opportunity is behind us, right? That's why I said last night in our newsletter, we're going to have to really work hard to get in quickly if we wanted to get in. That opportunity now has passed us. Now what we want to do is be aware of our surroundings. We are tucked right into this resistance little area right here, 95.78, 94.78. What's our options, Joe? How do we trade this? Well, what I would do is look for a 5-minute candle to close above 95.78. If that's the case, then we know the bulls are still in control and we can keep buying up to 96.08, ideally final target 97, 96.89, 97 even. I'll err on the side of 96.85, right? So 96.85 on the way up. So we know that if price does if it does close above this 95.78, yes, we do have the chance now to buy pullbacks as we keep rising. We will also want to make sure that we see clear market direction, clear market personality. Repeat after me, kiddos, right? I gotta see market personality today for me to really buy into these buyers being in control. Now you know what market personality feels like, right? High speed, higher highs, higher lows. This is a moving market above 95.78, and I'm buying pullbacks. If we're just lollygagging up here, I don't know where that term came from, right? If they're just hanging out up here, no speed, no volume, guys, I'm suspicious of this to collapse and come right back down in. So look for strong sentiment above that 95.78. If you want to be buying above that, we need to see those bulls in clear control this morning. I'm going to drill down a little bit further here now, and I'm going to say we might be getting ready here for a short-term reversal. And this is where I'm going to be looking for us here this morning in our live trade room. Let's go down to a little bit more accurate time frame here. How about a 60-minute chart? Now, a 60-minute chart is a great gap between the 4-hour and then now down to an hourly. And what are we seeing here? We're seeing quite a bit of the same stuff. We can see that narrow price wedge. And this was referenced last night on our blog, this 60-minute chart, and how we talked about how this narrow price wedge, if you go to the 60-minute chart on the blog, remember this last night? We talked about this narrow price wedge and how we were expecting to see some sort of break. And I just simply said, all right, since we've got the daily chart showing us support, since we had the 4-hour chart showing us support, with that narrow wedge on a 60-minute chart, it just made sense that we were going to break out, and the odds were to break out to the upside. So this narrow wedge last night, it gave me a wide open window here for expecting higher prices this morning, and you can see without any doubt in our mind, we were exactly correct in the newsletter last night. Members, good job getting into this trade early. Guess if you didn't get into this thing early, if you weren't prepared for it, you've missed your opportunity now. Now we're sitting inside of this trigger zone, and this trigger zone is going to make our jobs a little more difficult when it comes to buying here right now. Again, what I'm expecting to happen is we're going to come up, test the highs of this range, and then hopefully give us a selling opportunity to bring it right back down. Now, we've refined that trigger zone now, 95.38. I'm going to go ahead and say 95.50 is where we'll be looking to start buying here. 95.50 is where we're going to be looking to start buying. That 50 comes from just above that 95.38. It's going to get us just through this top of this trigger zone. And remember, those trend lines, these trend lines are not specific price levels, right? These trend lines are these thick, as I say, in the trade room, don't think of trend lines as thin Sharpie pens. Think of it as a thick Crayola crayon, right? Those kitty crayons, right, with a big wick or big wide tip on them. So think of these trend lines that create these price wedges. Think of these as ranges that will surround those lines, right? They're not going to be perfect. So we might see price break out. We might see it collapse here and come back down in. That's going to be something we have to wait for here this morning. I am going to be looking for a 5-minute candle to close above that 95.38 for me to consider getting long. Otherwise, I am looking short only until we get that close above 95.38. So what we're seeing right now is long-term buying potential today, short-term selling potential today. Let's see if we get one more. Let's see if we get one more final clue, and that comes from the VIP chart. Now we did a whole day of analysis on this in our trading summit in Vegas last weekend. We had a great week with our students in Las Vegas last week. We spent a majority of the time working on buy and sell zones, and of course this VIP chart, which we call the London VIP. This is a 5-minute chart, very, very simple. Only the very important price levels on this 5-minute chart. I do need to move this box up a little bit. This box will be up just a hair. Let me add it. Let me revise these numbers for you since we have made new higher highs. There we go. I've got 94.38. 94.38 is the top of that range, and we've got 94.20 is the bottom. Just wanted to make sure that I revise that. As you can see, now we have some new. Now we got some new prices here on this trigger zone. Alrighty, be prepared for that trigger zone. That's going to make for an excellent profit target as we come back down. What's the first thing we notice here today, guys? If you've been watching these broadcasts from time and time again, what's the first thing we notice here? Whoa, that's a wide range. We do not see this wide of a trading range very often coming out of London, right? That's the first thing that stands out to me. Now, guys, what do we always assume when we see a wide trading range? One of two things. The first thing we assume is that this price can't keep going like this forever. It's most likely going to collapse. It's most likely going to reverse. That's why I said this morning, I'm going to be looking for a short here in our live trade room right out the gate. But what's the second thing? Well, the second thing this gives us for a clue is this market just might be strong enough to be a tremendous trending market today. Now, you might be saying, but Joe, I read in a book one time that markets only trend about 30% of the time. Well, I tend to think you're correct. In fact, it might be even a little bit less than that these days, right? So what do we think? We think, A, either we're going to get a collapse here inside the London reversal zone. Boy, we've never seen that before. I'm kidding, obviously. That's been one of our most popular trades. Or B, we may just see this price continue and it close above the 95.19, and now we have reason to believe these buyers are still well in charge. Now remember, folks, we've already defined 95, what was it again? We just saw it, 95.38. That was the trigger zone highs off that 60-minute. Remember that? That 60-minute chart, 95.38. So now that we know we've got 95.38 up top there, well, Joe, let's see what we got. 95.38, 95.61. Okay, this is crunch time now. Option number one, I'm selling here short with a 5-minute candle closing below 94.86. That's 94.86. That's short below 94.86. Next thing we're looking for is going to be a close above 95.19. Remember, this is going to be that reversal zone. This is still a part of that trigger zone we found earlier. So we're talking about higher risk here trying to buy. Higher risk here trying to buy. I think the best option here right now is going to be to look for a buy above that 95.61. Right, let's play conservative here on a Monday. That's really a Tuesday, on a Tuesday after a holiday weekend. I'm looking for shorts here as high up as 95.61. I'm not going to play with fire here this morning. As you can see, once we get above that 95.61, though, I will begin to look as far as buying opportunities. But I'm going to stay patient this morning, looking for this price to exhaust and looking for it to reverse. Once again, as price moves higher, I'm looking for a reversal. Then I will get in and sell short. I will take a partial profit target off at the top of this trigger zone, and I will try to hold on to it to get to the lower end of London's trading session at 93.65. I'm looking for targets at 93.65 all the way down. Guys, I want to thank you so much for coming out and listening here this morning. My name is Joseph with a technical approach to the market this morning. I'm going to put this chart up on the blog right now on crudesquawk.com, and I'll make sure you guys have all the levels you need to get your day started starting in about 10 minutes time. without any further delay, I want to thank you guys for being here. I want to take you over now to see what Marty's up to. We're going to go all the way from Los Angeles over to New York City this morning. We're going to check out and see what Marty Errico is doing here on the NYMEX exchange. Marty's going to be providing us with some pit analysis. And Marty, let me give you screen control, and you can take it from here, my friend.
Just 1 second. All right, ladies and gentlemen, good morning to you here on Monday morning, Tuesday morning here. All right, guys, let's take a quick look across the board. What I got for you is a little bit of a bullish sentiment against geopolitical news out and about concerning Syria, concerning Iran, and a couple really other these big geopolitical factors that have been shaking and moving the market. Again, crude always waiting for its next story to move the market. We recently been seeing, just some bullish factors in this market. So what I'm looking at here is just kind of our indication across the board. I got crude trading higher this morning, Brent trading higher. We'll get into specific prices in just a second. I got RBOB and heating oil all trading higher with some volatility conviction to the upside here. I got your spreads in somewhat of a narrow range, very tight this morning on the border of negative prices. So spreads are very tight, causing the market to trade higher as well as our indication here on our currencies. So let's get to it. Let's take a quick look at price levels. We'll start off by looking at our crude right now. This morning, what I got for you here is 95.10 trading here. We're talking just about a buck higher off of yesterday's settle. Implied volatility about 21%. Open interest 317,275 with your vol index trading at 20.25% and your put to call 0.445. RBOB trading higher as well here. Look at it, 285.89 trading about 4 cents higher on the day with volatility just about 26% or so. Open interest 99,881. So more evidence RBOB will be leading the way today, higher with higher open interest with higher put to call ratio, again giving us the divergence to the upside. And then our heating oil 290 halves trading. It's up 5 pennies on the day. I got implied volatility about 22%, so vol overall firm here in all three markets. Open interest firm in all three markets. In the heating oil, it's 91,404, and then that put the call ratio high at 10.143. So really, what we're seeing here is this multiple market divergence pushed to the upside. I'm looking at that 95 half as a nice level of resistance above that we want to keep an eye on. Again, I got other levels for you in just a minute that we'll go over, but that 95.30, 95 half, great levels of resistance above, which I agree with JJ on. I agree with this bullish-like sentiment due to the spreads. I mean, let's take a look at the Brent crude right now. Brent's trading at above 4, the higher upside bid here, so we have relative to the range from Sunday in the overnight. We've been trading. So we can also get Brent crude. Brent right now, Brent WTI spread about $9. So still today in this upwards trend move here. We look at the crack values. They're about 89 cents or so. The 89 handle equivalent. We trade here in this 95 handle. So we've been seeing crack values kind of just firming up just a bit along with volatility. So these have been giving us our indications to the upside. Options traders, they shore up a lot of risk to the upside and to the downside. Honestly, they put a lot of interest in that $97 level. They put a lot of interest here in the $94 strike level as well. So we've been seeing just a lot of activity here to these high strike levels. I'm looking right now here, implied volatility just about 23%. The OVX closes and settles Friday's trade at 22.57. As we kind of roll through here our levels in just a second, first I want to talk real quickly about our currencies. So you saw the currencies before on that other sheet. We saw dollar was kind of higher just a bit today. Now the reason why we're moving so much higher on crude and our products are because there's some news out that was kind of geopolitical news that kind of was disturbing the market just a bit. causing the crude to really trade higher fundamentally and technically really as well. We were looking at some news out of Syria. Well, I'm getting into the details of the news that went on the broadcast. I don't have much time, but really this news really kind of just sparked up crude just a bit higher. Now I think that since we're going to be hitting through certain technical levels, this will technically also pull the market up a little bit higher as well. Of course, watch for a bit of a pullback off the opening bell, but I think we clear that $94 level, that $94.20 level that we've been worried about, that we need to open above to get a bullish-like sentiment. So we're way above that, up at the 95 handle now. The mini contract shows a lot of interest to the buy side as well. Keep in mind, look at open interest. It's decreased. It's lower by just about 15,000 or so. So that's indicating that there's some shorts out of the market. There's some longs coming in, and they're starting to firm up both sides, and they're playing that range. So we can see us get up towards back the high of the range, 97 ultimately. By the end of the week, I'm thinking we can get up to 97 bucks and then turn around again. So talk about levels here. We had a close and sell on Friday. I'm not going to worry about yesterday's or Sunday's session. I'm going to talk about Friday's pit session here. We had a high up at 94.29. I had a low down at 93.04. We had a close and settle at 94.11. Today, daily pivot 94.17 with some resistance above at 95.30, 95.42, and 96.69. And some support down below at 94.05, 92.92, and 91.67. So once again, just one more time here. Support down below 94.05, 94.92, 92.92, and 91.67. I have your daily pivot here at 94.17. We are above. Intervals of resistance here, 95.30, 95.42, and 96.69. And let's talk about natural gas real quickly. So we have it on a tear to the upside here in the natural gas in really the overnight session. As you can see, yesterday, actually a pretty active day in the natural gas in the Memorial Day holiday Globex session, if you will. So we did see some decent activity in natural gas. So what we're talking about here is upside activity, guys. Big upside activity. We've been looking at weather being a big component to this market now as the summer season is here. We've been watching summer cooling coming into play, so a lot of demand being used cooling, so natural gas has been trading higher. You can see we have some levels here of resistance above at 36, 437.70, and 442.20, and some levels of support down below at 4.25.90, 420.60, and 408.90. Daily pivot today, 431.40. So right now, ladies and gentlemen, in the July track for natural gas, of course, we are on roll. We're trading at 427.40, just below the daily pivot by about 4 pennies. So, alrighty, guys, that's going to be about it here. You got your information at 8 o'clock. I'm going to throw back over to JJ quickly, and I'll see you guys all in just about 50 minutes here on the trading floor once again for a Tuesday's session, holiday shortened week. See you all in just a little bit. I'm going to give you guys back over to JJ now.
As always, Marty, thank you so much for coming in with such great insight directly from the trading floor. Guys, as I always say here in our trade room, it's such a value to have this opinion coming straight from the floor. It really is such a unique opportunity for us who really rely on the screens. It's funny to hear Marty say, talking about geopolitical news coming out of Syria and saying that's what caused prices to rise. From a technical standpoint, one of the reasons why I fell in love with this industry over a decade ago was the fact that the way that I see this market is, what news from Syria? The charts told me this price was going to rise, and that's the beauty, and that's the effective, right? That's the strategy. The strategy is to use a combination of what Marty's seeing in the pit and what I'm seeing on the screen. As you can see, all news aside, we clearly saw that prices should rise. We've got a bullish sentiment on the daily. We had a narrow wedge on the 60. The 4-hour chart told us to be bullish, and then of course that geopolitical news just throws the frosting right on top, right? So remember, which came first, the chicken or the egg? Which came first, the geopolitical news or the chart pattern? Depending on which side you believe came first, I encourage you to come out and join us tomorrow. Let's see if we can do this again tomorrow and have some nice factors lining up both from the screen all the way down to the floor. As always, my name is Joseph. Thank you so much for being here today. It's about that time of day again to wrap it on up, 8 o'clock Eastern Time, 7:30 a.m. We get started every morning. I'm JJ at School of Trade. That was Marty Errico at Traders Audio. Thank you so much for being a part of this, and we'll see you guys next time. Charts will be up in 2.5 seconds. You guys can check charts the rest of the morning, and we'll catch you guys here tomorrow, 7:30 a.m. Adios, amigos. Bye-bye for now.